You ever get that feeling that you know you're growing a business, but you're not really sure if you're creating a valuable business, like a business that can stand the test of time? Are you creating a legacy or a lifestyle business? Is your business a business that is truly valuable and can be used to create real wealth for you and your family? You're listening to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden. I'm CPA and CEO of Kickstart Accounting Inc., where we use bookkeeping as a vehicle to help business owners take control of their numbers. I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're going to talk about how to use your balance sheet to measure and grow the value of your business. So what exactly is a balance sheet? The common mistakes business owners make when growing their business, and the process I use as a CFO who has sold multiple businesses to increase a business's value. Recently, we had a client call. This is a long-time client. It has been so fun to watch her grow her business. She started off as a solopreneur and she has grown into multiple locations. Now, one thing that has come to her attention over the last year is that she might want to sell her business eventually. Her business is not a lifestyle business. It does require a lot of her time and energy. And she's already thinking about, what does the next chapter of her life look like? Does she want to retire from this business in 20 years? Or does she want to move on and have the possibility of doing this all over again or spending time with her family? So this client has been thinking about what's next in her life and how can her business support her in her next chapter rather than holding her back. And rather than just walking away from her business, like we've seen way too many business owners do throughout the years, she wants to actually use her business to create wealth to support the next chapter of her life. Now, our client had come to us and talked about wanting to build her balance sheet. She wanted to create the assets. She wanted to put more assets on her balance sheet so that her business looked more attractive to potential buyers. Today, I want to talk about what are some of the other ways that we can increase the value of our business outside of the balance sheet. So let's start with the basics. What is the balance sheet? Like, what am I even talking about? The balance sheet is known as a statement of financial position. Now, this is one of the big three financial statements. Remember, we have our income statement, the balance sheet, and cash flow statement. This report provides a snapshot of a company's financial condition at one point in time, right? Unlike the P&L that goes over time, our balance sheet takes that snapshot in one specific time. So month end of this specific month in time. And it shows what the business owns, the assets, and what the business owes, the liabilities, and then the owner's equity. So the three components, just to recap, we'll go a little bit deeper. The assets, these are all the resources. These are the things that the business owns. It has economic value. And these are things like cash, accounts receivable, the money people owe you and your business, inventory, so the inventory that you have sitting on your shelves in your store, the stock that you have, and then the non-current assets. These are things like property, equipment, buildings, those intangible assets that your business owns. Now, the liabilities, these are the obligations that your business needs to pay in the future. And these are things like your debt, your credit card debt, your line of credit, the bank loan that you have, those debt facilities that have helped fund your business and fund the growth of your business. Now, the equity really represents the owner's claim on the business. So after all the liabilities have been deducted from the assets, these are items like your retained earnings. This is also where you'll see things like your owner's draws and personal expenses. Now, for our clients, the equity section is actually the largest section of the balance sheet. And when we are thinking about creating value in our business, it's not always necessarily the most healthy thing. Now, this is how we are going to pay ourselves as an LLC. But as we become an S Corp, and we're moving our salary onto the income statement, we will take less in owner's equity, owner's draws, and personal expenses through the business. Now, I'm not saying any amount is right or wrong, right? There's no specific amount that you should be taking. There's no percentages on the equity or balance sheet like I give you so often on the income statement. There isn't any cut and dry rules for the balance sheet. However, we want to have more assets than liabilities, right? We want to have more assets such as cash to pay the obligations of our business, to pay the day-to-day operations of our business. So we want to have more cash, accounts receivable, equipment than we have debt in our business. We don't want to be debt heavy or even equity heavy, right? We don't want to have more in draws than we have in income. So we don't want our draws to exceed our profits for the business year over year. You're pulling out the equity. You're pulling out the value of our business. All right. So how do we use the balance sheet to increase the overall value of our business? And then how do we use the other areas of our business to create true value, right? Because the balance sheet isn't always what we're selling. In small business, we're selling the entire operations of a business, not just the balance sheet. So the balance sheet can help us look attractive to buyers and to create a really valuable asset in the future of our business. And in order to do that, we need to invest in assets. This means purchasing new equipment, investing in property, developing new products, and keeping enough cash on hand to cover the day-to-day operations of your business. When you think about building a valuable business and you think about creating a balance sheet that supports the value of your business, growing your assets is going to be the number one strategy that you can use in order to create a valuable balance sheet. Next, we want to keep our liabilities low. So keeping less than our assets in our business, knowing that we have enough cash in the business to be able to pay down our debts over time. You guys have heard me talk about debt at length on this podcast. I love when our clients take on debt to really grow their business. There is a time and place for debt. I always want you to take on responsible debt. So keeping in mind that we can pay down that debt over time and continue to create a valuable business. One thing I wanted to shout on the rooftops, not just to my client, but to every single one of our listeners, is that we can create a valuable business outside of the balance sheet. So yes, cash is important. Yes, having inventory and equipment and accounts receivable. Yes, those things are important in creating a valuable business. But I truly believe that building a healthy operations is going to be the best thing that you can do to create a valuable business. Now, I love the framework that John Warlow has laid out in the book Built to Sell. I am a huge fan of John. I got to meet him last year and shared with him what an impact he has made on my business. And I want to keep on sharing the love and sharing his framework on the podcast for our listeners over and over and over again, because this is how we can create a legacy for our families. It's creating a business that can stand the test of time without you. I know business owners set aside your ego. We want to create a business that doesn't need the business owner in order to operate. So I want to go through the framework that John Warlow has laid out in the book Built to Sell. This is just a summary. So go download his book, listen to the whole thing. It's a really nice, easy listen. It's about 4.5 hours, easy listen. And you can pull out the topics that apply to you and your business and use them to implement in your business, and then keep track using your income statement and your balance sheet to track your progress. All right, the first thing that we'll do is focus on one thing. John Warlow emphasizes the importance of specializing on a single service or product. The specialization should be reflected in your assets. So for example, in the book, he talks about a design firm. So instead of taking on any and every client that wants anything under the sun to do with design, he became the logo master. And they created a system that they use over and over and over again to design logos. They do one thing really well, and they do it over and over and over again. We'll get back to the show in 1 second, but real quick. Are you an entrepreneur or business owner struggling with the complexity of tax deductions and salary structures for yourself? It's common to feel lost in the maze of tax regulations and unsure about how to effectively pay yourself from your business. Navigating these challenges can be daunting, leaving you with more questions than answers. But what if there's a way to simplify this process, ensuring you maximize your deductions and set up the most beneficial compensation strategy for yourself? That's exactly what our guide on the top tax deductions for every business owner and how to pay yourself as a business owner are for. These resources are designed to demystify the essentials, helping you understand and leverage tax deductions and outline a clear, effective strategy for your salary as a business owner. Through these guides, you'll learn the key deductions you shouldn't miss, strategies for tax-efficient salary and owner's draws, and much more, ensuring you're financially optimized and compliant. So if you're ready to take control of your financial health with confidence, head over to kickstartaccountinginc.com/gift or click the link in the show notes and download your free resources today. Okay, back to the show. Now here at Kickstart Accounting Inc., I'll walk you through how we use a lot of these strategies in our business. So our number one thing that we focus on here at Kickstart Accounting Inc. is our bookkeeping. You literally cannot do anything else in your finance and accounting without bookkeeping. And so we focus on bookkeeping first. It is the vehicle in which you can then look at tax planning, wealth building, budgeting, CFO services. All of those things can be built on after you have bookkeeping in place. So our number one thing is bookkeeping. Step 2 is to create a process, to document and standardize your process to create a scalable and repeatable business model. Now, in John Werlow's book, he created the logo process. Here at Kickstart Accounting Inc., we have created a very similar process. Every single one of our clients, during their onboarding, they come through our strategic framework. We use our framework to set up the chart of accounts, the income statement, the balance sheet, the cash flow statement, QuickBooks, so that every single one of our clients uses the same chart of accounts and framework. It creates a system to allow us to be able to send our clients the snapshot at the end of each month. Our clients receive an easy to read document at the end of every single month. This overview allows our clients to sit in the CEO role of their business and to be able to look at their numbers like a business owner. However, for us as a firm, it's part of our process. It is the process in which we take our clients through over and over and over again. And you know what? We know that it works. We have watched the transformation in hundreds of business owners, and it is amazing to watch the process work over and over and over again. So how can you focus on one thing and then create a process around it? All right, step 3 is to build a strong management team. Your management team is a crucial asset. We need to be investing in training and development so that our team can operate the business independently. And this is going to add value to your business. Now, you can see how these 3 things that we've already talked about, they're nowhere to be found on the balance sheet. If you looked at the Kickstart Accounting Inc. balance sheet, there's no line item for my amazing team. And I have a really incredible team, and we invest heavily into our team's development. You can see the income statement line on training, but you can't see the value of a strong team on the balance sheet. All right, next we want to develop a sales engine. This is a reliable sales process, and this is an asset that increases your business value. Now, you won't see the sales standard operating procedure on the balance sheet. It is something that we do behind the scenes to make sure that we have a repeatable process that can live on with or without me. I only do discovery calls 1 day a week. My team has a sales process that we use over and over and over again that we know that works. And again, that's part of our standard operating procedures, but it is not a line item on our balance sheet. Next is to standardize your offerings. Standardizing your products and services reduces the complexity and makes your business more efficient. Now, we do this in our offerings, and that our clients can pick one of 3 packages. Our clients can always only pick 3 packages. They get the basic, standard, or premier. Our basic financials delivers financials by the 25th of each month. Our basic package does not include a supportive team and monthly calls. Our standard package sends the financial statements by the 15th of each month and includes one 30-minute call. Our premier package receives financial statements by the 10th of each month, a 60-minute call. And this is where our clients who have a more sophisticated financial process, they sit here in the premier package. We have standardized our offerings so that it's really easy when a new business owner comes to our door and says, hey, I need bookkeeping. Where should I begin? We make it really easy to begin. And then over time, they can add on our additional frameworks. So some of our clients over time will sign up for budgeting, CFO services, tax planning, tax services, but it always starts with our one thing. And every single one of our service offerings is standardized. Again, you won't find our SOPs on the balance sheet. All right, next we have automate the financial tracking. By automating your financial systems, you ensure the accurate and timely financial reporting. Now, I think that we should automate this with people. Every single one of our clients receives their financial statements automatically every single month. But notice how having a reliable money team is part of creating a valuable business. You as a business owner cannot track the moves and decisions you're making without having financial tracking in your business. So as you make pivots, as you make changes to your business, you need to have a tool to report back to you what's working, what's not working, what is successful, and what should you stop doing right now? All right, we have a few more. Build reoccurring revenue. Reoccurring revenue streams, such as subscription models, provide predictable incomes. This should be a key focus on your balance sheet because you are reflecting the long-term contracts and the customer relationships that are going to support ongoing revenue. When you go to sell your business, when you think about creating a valuable asset that can either stand the test of time or to be an asset to sell to create a legacy and wealth for your family, ongoing reoccurring revenue is a game changer. This is a key financial metric that can be tied to the success of the business in the future. It's not just an SOP. It's not just a standard operating procedure. It's not just paper in a file somewhere. This is real, tangible dollars that are going to provide consistency and predictability in your business. So if you don't have reoccurring revenue today in your business, how can you update and change, modify the way that you serve your clients today to create that subscription model? Next is to create a vision for the future. I think as business owners, especially for our clients who consider themselves air quote accidental entrepreneurs, it can be really difficult to articulate a clear vision for your business's future growth. The vision is going to lay out where your business is going. It creates the map in which your team can then row with. We provide our clients with budgets that support the vision of their business so that they and their team can be rowing in the same direction. So when you think about building a valuable asset, it is your responsibility as the CEO of the business to create that vision of the future. It is your responsibility as the business owner to pave the way, to create the budget, to create the clear plan for your team to be able to help support you in creating a business that is valuable, that can create a legacy for you and your team. So let's tie this all together, right? How do we balance our balance sheet with operational efficiency to create the most valuable business possible? You guys have heard me say this before, but number one is always going to be regular review. I want you to review your balance sheet every single month. This is going to help you stay on your financial situation and make informed financial decisions. If you see your assets decreasing, cash, receivables, inventory, equipment, and your debt increasing, or your owner's equity increasing, or your owner's draws increasing, then we know that we need to make changes as soon as possible. We can't have our cash go down and our liabilities go up. If you are taking out more in draws than you have in profit, you are putting your business at risk, and you are going to be able to see that on the balance sheet. That's why there's 3 reports. We can't just look at the income statement. We also have to look at the balance sheet at least once a month. We need to keep track of our changes, keep track of the changes in our assets and our liabilities and our equity over time. This is going to help us see any trends and make those necessary adjustments. We had a client a few years ago who she had implemented a second revenue stream, and she was so excited. It was actually really incredible. So she launched in November and she had hockey stick revenue. I mean, seriously, hockey stick, high growth revenue. The money and the cash was coming in. But as her contractors, as her team was working on the project and delivering to the clients, as she was learning how to manage that team, she found a few specific things. 1, she didn't enjoy managing a team. 2, she had underestimated the cost it was going to take in order to deliver that service offering. By August, she was watching her debt increase, her cash decrease, and she was not even able to think about taking out an owner's draw. She had to dissolve that revenue stream despite record revenue growth. She knew that it wasn't profitable. And she knew that by looking at the balance sheet, because she saw her debt increasing and she saw her cash decreasing, right? By looking at the full picture, we were able to see that this revenue stream did not increase the value of her business. All right, next action tip. I want you to invest time in planning and strategy. The balance sheet is an important part of looking to the future. Every single business owner, including myself, should have a budget where we're looking to the future to create and cast the vision for our team. And this will include thinking about how we're going to build our assets, how we're going to be able to invest in saving cash, in inventory, and property and equipment, right? We can plan our strategic investments by creating a budget for growth. We can also create a budget for our non-balance sheet items, like training our team, developing the sales engine, and standardizing our products and services. Those things take time, money, and energy. And by creating a budget and then tracking your progress, it is going to allow you to continue to invest in a valuable company. My goal for every single one of you is to be able to create a healthy, sustainable, profitable business. So today's episode helped you in creating a valuable business that's going to help you create long-term sustainable growth. I hope you'll hit like and subscribe. We'll continue to come back every single week with more tools for you to be able to continue to invest in your growth. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.